Buyers rallied to new highs last week, but fell back into range during Friday's trade. Is the retracement a red flag? Or are buyers still positioned well for new highs? And what do they need to get done in order to press the advance next week? My name is Lamont, full-time trader, part of the Chart Guys team, where I head up our swing report and our futures room. In this video, we'll cover all of that and more, so let's get into it. All right, so starting off with SPY here, as we were talking about just now, well, if you recall from 2 weeks ago, what we cared about this week, which was very heavy data week, we cared about whether or not these buyers could maintain over this guy. We wanted to see them get back over 643.38, which is the point of control of this all-time high structure here, because affirming this structure as demand would keep these buyers positioned well for new highs. So that's still what we care about next week. So what happened this week was that we started off with a bit of a pop and drop here, and that was not great, but we knew that, again, as discussed last week, that if we were going to fall back under the point of control of this all-time high structure, the next objective for the sellers should have been to come back down here. It should be, it still is, to get back down to 639.85. They want to negate this next meaningful area where there was value established in the past, especially because this is where the buyers last defended, right? That did not happen, right? So the sellers had a pretty decent start, opened up over here, pop and drop at the value area high, moved down under the value area low, but could not close this gap, could not come back down and test this 639.85. It's not a really gap, but what I mean to suggest is that they could not advance to the next meaningful breakout point. So this breakout and this breakout continues to be affirmed as long as holding over 639.85. And so the best case scenario after this break into new highs on Wednesday and Thursday's trade would have been to keep holding over 640.650, right? That would have given these buyers the absolute most confidence, right? Because then that means that we're holding over the prior all-time high. So that is not what we got. However, you'll notice the low of the day on Friday was pretty much right at the point of control. So these buyers are still positioned well for new highs as long as you can hold over 643.38. Now, the way that the price action ended at the close, it doesn't really inspire a lot of confidence, right? It looks like a potential bear flag here. And the sellers notably took out this area of demand from a session-to-session perspective. And the buyers throughout the entire session could not get back to the prior regular trading hours low. So this was notable, right? Despite the fact that these buyers kind of attempted a bounce here, it was not a very strong bounce. So we're right back to caring about 643.38, all right? Next week. And so again, if we can hold over 643.38, doesn't have to be a perfect hold, right? If you drop and pop under it and then hold above, no big deal. So that's pretty much it. Moving on then to, actually we have these trade zones here, right? All right, so this one already came in, got to your target already. This was the ad for this original, or if it's a fresh new position, whatever, hasn't quite gone to the target yet. The target should be adjusted because this was based off of, if I recall correctly, was based off of the monthly R2, and now we're rolling over to a new month. So I don't think it's updated yet. Oops. It's not updated yet, so we'll just have to update it next time. But I do think it would be reasonable to take some profit on this ad, walk your stop up to under this low 632.95, and then leave a stop for any remaining positions still just under this low. All right. Moving on to the Qs here. So the Qs is kind of a red flag, right? I'm thinking bigger picture, we're probably looking at some bigger picture balance and chop here, right? Because it's just a big retracement, right? This was a pretty notable retracement straight into a higher high that could not hold into another big retracement. So it just looks like something like this is shaping up, or something like this is shaping up, or something like this is shaping up, something like this. The market spends most of its time balancing, and we've seen smaller periods of balance here on the way up here, but we haven't really seen like a prolonged period of balance in quite some time. So I would not be surprised if that's what we're looking at right now. And I think we talked about that in prior videos. I'm not sure if that was during prior weekend updates or whether it was just during, one of the updates during the week. I'm not sure for our community. But it's something that we've been keeping an eye on, right? And what we wanted to see to decrease that potential was to get back over 574.63 and hold over it, right? Because so far, the breakout over this high is kind of the problem right now, right? They couldn't hold it over here, right? And then they failed to hold it again last week. And so this is potentially a head and shoulders kind of pattern here, right? And what we care about whenever there's a potential head and shoulders pattern, which I think we talked about last week, is just the supply sitting at the top, right? This is what we care about. No different than if we're looking at like an inverse head and shoulders, like maybe, I don't know, let's see, even like this big old janky one over here. What we cared about was the demand sitting, but making for the head, right? So if these sellers could not take out the demand, this structure over here that's making the head, then this right shoulder was going to print. So that's kind of what we're looking at right now. As of right now, if these buyers cannot overcome this structure, then this potential head and shoulders is certainly on the table. So next week, what do we care about? We care primarily about, I would say the key upside reference is 580.06, and then the key downside reference, I would care about this guy, right? So this structure over here from July 17th to the 24th is what held this most recent sell-off, right? This is where these buyers played some defense here, making a good amount of space for a higher low. I don't really care about this dinky one. I would say anything over 558.84 will be good for one. I think the key downside reference that we should care about next week is 566.06. If these buyers can keep defending this structure and then we see balance like this, right, just bouncing over like this, over this guy, that would be fine, right? But if we lose this as support, that would be quite a notable change, in my opinion, and the odds of us seeing this head and shoulders play out would increase. But, you know, bigger picture, if you can't take out this high, right? So this breakout ever since June 24th was over this big chunk of structure over here, right? So right now it's acting as demand. And if these sellers bring us all the way down here but can't take this guy out, it's really not that big of a deal either. Okay, so again, that's kind of bigger picture, right? That's like looking at the monthly chart, for example. Here's this monthly chart, and if we were to retrace but hold this structure over here, no biggie, right? Essentially, that would mean that this breakout over the February 3rd high continues to be affirmed as long as holding over 540.81. All right, so that's pretty much it. Moving on to the rut here. So for the rut, it's quite clear, right? The rut is still showing a lot of relative strength, right? The narrative right now is rate cuts, and rate cuts should benefit these small caps. And so the rut still showing you that relative strength. Space for a higher low. Daily retracements underway. Anything over 223.69 will be good for one. I think the key downside reference is just going to be 231.46. That's this high over here, because this breakout over it on August 22nd, of course, being affirmed as long as we're holding over 231.46. Upside references, I'm thinking this guy, the all-time high supply. This is all that's left in the way before our new all-time highs. Its value area low is at 238.50. So I'm thinking, I would not be surprised to see us chop around, like go over this guy, right, over this fella and under this fella for some time. That's just kind of what the rut does. The rut spends a lot of its time balancing because it's 2,000 different names within it, right? So it's very hard to get 2,000 things to agree on anything, So that's pretty much it. It's just like it's like trying to get your friend group to agree on what to get for dinner. It's like someone's always unhappy, more or less. Not me. I'll eat anything. That is pretty much it for the rut here. So moving on to the Dow. I don't think that Dow still hasn't gotten to target here. But at this point now, this is enough of an advance where I would definitely pull these bids lower if you're using this trade zone of old and walk your stop up to under this guy, right? Because this is the local area of demand, so 445.88. Again, I would pull these bids lower, walk your stop up to under this low. I'm sorry, up to this low. Ideally, chop it up too, because you don't need to chop it, right? If you only got this fill here, you walked it up to here, I would give it some leash to try to get to target first, personally. Anyway, still just trying to make it crawl its way up to the yearly R1 here. The Dow is honestly showing you quite a lot of relative strength, right? It was able to maintain this new breakout. It's a breakout over this prior all-time high as well. So quite notable. Key downside reference next week is 452.15. And I'm looking up at the yearly R1 as the next day plus objective for the Dow. Weekly time frame as well is making a lot of space for a potential higher low with anything over 433.40 good for one. Mega caps, or large caps, I guess, are looking good. All right, that's pretty much it. So what else we got here? Moving on to the what? No, that's not right. We do the dollar next. Okay. So moving on to the dollar here. So the dollar, again, I would really not make any changes to this. It's a very straightforward balancing kind of a setup. We've been balancing since April 10th under this guy, right? Under this. Oh, okay, I see what's happening here. Be adjusted under this guy over this guy. I would make no change to this, right? This is just how you want to handle responsive trade. Just like these setups in here, I think there was a failed attempt in here. These all worked. This worked out fine. As soon as you see this high set by this structure and then this low set by this structure, you can already start getting aggressive here and getting aggressive here, etc. So it's basically a repeat, right? Like these setups here are pretty much the same idea as this one over here. So I think it's fine to just stick with it. Obviously, walk your stop over here, and if you see follow through under the 97.445 level, then I would walk the stop to over this high, 98.725. But for now, I would just stick with it, and I think the buy is also quite reasonable. All right, so no change to the dollar. Gold going for that breakout here. In this case, you know, to turn the adjust on to match the spot price, I guess would make them more sense. But either way, gold is going for that breakout now, because in the futures chart, when you don't adjust for it, you know, it looks like you've already had this higher high lacking follow through, which is something that I think I should be more mindful of. Perhaps I should cover XAU USD like Dano to avoid all of this backwardation and contango. I think I'll do that going forward, actually. So let me do this. All right. Okay, so for gold here, it's going for this break. It's trying to go for this break. Very clean pennant. Like, it looks like it's, you know, ready to go here. Could it just fall back into range? Sure. If you can't find acceptance over 3451.525, that's this high over here, then you probably continue to tighten up. If you continue to tighten up, I think bottom fishing using the developing value area low is probably a good place to make an attempt here. Hang on a second here. So you don't get that setup back here, but you know, this one worked out quite well. This one worked out quite well. It stops you all over here. This one might be tricky. The risk is not there, so maybe you pass on this one. This one works quite well. This one works quite well. So if it were to give you another opportunity to do so, then, you know, I think that's a reasonable setup. In prior videos, I do recall saying I didn't love that because I was looking at the futures chart, right, where I was interpreting this as a higher high that lacked follow through. And so higher highs that lack follow through, you typically will see the sellers make an earnest attempt at testing the lows of the range. So that was just a bit of an error on my part. I should have checked the spot price, so apologies for that. At this point now, space for a higher low. I don't care about any of these dinky ones. I would say anything over 3311.560 would be good for one. And if you didn't catch this, you want to catch this, you can just wait and see if this breakout actually does get affirmed. If it does, great. You can look for a backtest play. Wait for it to break out, look for a backtest play, etc. Fundamentally, I think the narrative makes a lot of sense to be seeing gold strength, just because the dollar looks questionable, as more questionable than it has in a long time, at least, right? Because, you know, just looking at it from a technical perspective, not getting political at all, you know, the dollar has been bouncing since 2022 in this range, and now we've seen, you know, fresh like 3-year lows. So, all right, moving on to NVDA. So NVDA earnings, pretty much a non-event, really. There was some whipsaw action in the overnight session, and a pop and drop at the all-time high. But, you know, as we know, what we should care primarily about is this guy over here, right? This back test over here. We care very much so about this fellow. Why? Because if we zoom out and just look at it on the weekly time frame, this is where there was the last amount of value, right? That a meaningful amount of value that was established, and it's sitting right on top of this big old block of demand here. So if these sellers can take us all, it's kind of like what we were talking about with the February 2025 high in the Qs, right? Bigger picture. If these sellers can't even get us back down here or can't get us through here, no big deal. It's the same for NVDA, right? And so for NVDA, if you're looking for a kind of a more value purchase, then I would say over here is a pretty good spot to look for that. So really no change to the NVDA chart in my opinion. Weekly stair step has now broken. Sellers not really advancing that much yet. The monthly is still fine. Lots of space for a higher low as well. And that's really it for NVDA. Moving on to Bitcoin. So Bitcoin, they are now slowly making their way through this area of local demand, but at the same time, if they cannot trade through it, this structure is still being affirmed as demand. I don't know where my drawings went here. Is this it? No, I don't think so. It's this. No. Okay, no, that's not it. This guy. You know what? Honestly, I think it's better to just look at this as like one weekly structure. So I would just view it like this here. Let me just get these out of the way. I would view it as this, like one big old structure on the weekly time frame here. And so as of right now, the point of control roughly 103868. I'm thinking this guy affirmed as demand as long as holding over there. Best case scenario would be to hold over the weekly value area high here, or the value area high of this weekly structure, 108804.88. And that's really it. But again, even if these buyers can hold over 103868, then this structure is still being affirmed as demand. That would be fine, right? It's no different than here, right? Like this was a break over this structure, didn't see that much fall through, retrace back down into it, but don't take out its point of control, which is roughly over here. And that was fine. Same dealio over here, where you backtest this structure, no problem. It is less space, right? Like there was much more space on this breakout. There was much more space on this breakout as well. So this little higher high, not really seeing that much follow through. It's a bit of a red flag, to be completely honest with you. But we'll still take things day by day and call them exactly for what they are. And as of right now, as long as they're holding over this structure, these buyers are still doing fine. And I stand by that trade zone. I think this is a reasonable spot to be looking for. No, that's not this. Damage. The one that was, I'll clean all this up by next week. This one, I still think is reasonable location for a potential buy. Okay. Ethereum here. So for Ethereum, I really no change to this either, right? Again, the higher high lacking follow through, not ideal, right? It's kind of, I think XRP did something similar, right? Where they pop and drop at the all-time high. So that's certainly not ideal by any means. But weekly time frame, that higher low not really confirmed yet. I would say anything over 3354.56 still on the table. Monthly time frame, good amount of space for a higher low as well. Again, you can't love that, right? If this is going to be a higher high that doesn't see follow through, the seller should try to test the lows of the range, and we've been balancing in this range since 2020. So, how we're going to assess, what's going to increase the probability that we come back down and test the lows of the range? It's all about this guy. So I still think this is a reasonable spot to be looking for trade. This is the last area where there was any kind of acceptance, right? This is a good amount of two-way trade here. And so if into here, no acceptance, and we just keep bouncing like this over this structure, the high of which is at 3941.86, no big. Probably start killing some of these yellow lines. They're kind of distracting. All right, that's it. And then finally for CCJ, okay, so pop and drop CCJ, gap up into new all-time highs and no follow through on that. Again, not ideal, bit of a trend here, huh? But this consolidation is still very healthy, and CCJ spends a lot of time trading sideways. So again, I would not be surprised if eventually we come back and backtest this prior all-time high structure here, which would just be looking for a monthly high or low. Anything over 35 bucks even will be good for one. And you can just see this is a monthly time frame. You can see how often it spends a lot of time trading sideways. So I would personally still just be most interested in looking for a backtest against the highs of this structure here. All right. So that is it. Trade review. I think we did a few trades. This I don't know why it's just not really sticking in memory. Didn't seem like a terribly eventful week. There was one good trade in the middle of the week and a full stop. So kind of an eventful week from like an action perspective, I guess. But anyway, let's get into it. So let's see. For on 826, I sold RTY against the 1 minute stair step against the high of the midday structure. All right, let me recall. Oops. That was Tuesday this day, so it must have been early on. It was a stop. Okay, I recall. It was here, and I just sold this pop I sold this pop over this high because it was a really weak open here. The sellers were positioned well to move out, or they were moving value lower as long as they could hold under the value area low. And I was thinking, all right, well, as long as they can hold under this midday balance, then the selling that started on this day would continue. And on the daily chart, I was looking for a back test of the 231.46, if I'm not mistaken. I believe that was the case. For a back test of 54? Is that this? 54. Back test of 54. Hang on a second here. 54. Why was I looking for 54? I'm thinking potential for the tightening, pop and drop at yesterday's hourly lower high. Am I on the right day? Hang on a second. Let me just find the references. Ah, 54 was just this local high over here. Okay, so I sold this SS, looking for a back test here. Bigger picture, I was thinking would probably continue to balance more after this. All right, I was thinking, okay, well, the value was very much overlapping to slightly lower. I'm thinking on the daily time frame, we should be trying to come back here if these sellers are going to try to retrace. So the first place where I'm thinking these sellers might have problems is just this last breakout point. So sell that, chop it up, and I was thinking maybe making a mistake picking on the relative strength. I don't know. Either way, chop 54, and then I stopped out the rest, and then I didn't do anything for the rest of the day because that context was no longer appropriate for the idea that I had in the morning. So that was it. Just a little base hit. 827. This was a pretty solid day, even though I did get shaken out before a larger move. What can you do? Sometimes that's how it goes. All right. So for the ES 827, we are here. And let's see, the daily chart looks like this. 37, 27th is here. Okay, so it's a pretty, oh, okay, right, I remember. This is one of my favorite plays, and this was one that we did last week too, right? On the IWM, we sold it over here because the open was right on this key daily level. I think this is, if you're going to trade the open, this is probably one of the easiest ways to go about it, wherein what you want to do is you want to see that open right on the key level, and then because that open is right on the key level, you know that the open represents both the key level and also what the cash market is doing, right? If the price is under the open, the cash market sellers are in control. If the price is over the open, the cash market buyers are in control. So it's kind of telling you two different things, right? And so on Wednesday, we opened up right on the value area high of this all-time high structure. And so if we hold over the open, these buyers, they should be trying to come here, right? So the R on that trade, if you don't see a lot of retracement below the open, should be pretty good, right? So the ES, so that's the context of it. So again, the context, I like to summarize the process with context gives you bias gives you location gives you the tactic, right? Which tactics to select, and that's the priority of things, right? You should assess the context first to get good direction of bias, and then the direction of bias again leads you to your location, because if you're thinking long, your next question to yourself should be, okay, well, where is there good value to get long? And in this specific situation, the good value to get long is ideally off of the open if they can continue to hold over it, right? Because that's where it's going to be cheapest to find out if they can hold that value area high, right? And then if you're wrong super quickly, no big deal. So I just bought this new high. I would have been open to buying the pass back over the open after the failure to get to the overnight low, but I was responding to a question. So, bummer, but is what it is, no problem. So I just bought this new high here, and that's at 931. Buy the new high, stop under the low of the day, and I was thinking it's a notable failure to tag the overnight low, and we're at the daily value area high, so that's that daily context I was talking about. And I'm looking for a PDC chop. The PDC, obviously, it's moved now, but the PDC chop was over here. Chopped it up at the PDC, and then I was looking for, I don't have the overnight high. Let's see, hang on a second here. I'm sorry, the overnight low? Let's see. No, it should be the overnight high. Looking for more at the ONH. So the ONH is here. ONH is there. And I just took it out at 88 under the overnight high just because that's my meme exit. I just like exiting at 88 or wherever there's an 8. So I took it out mouse at 88, and then I just I didn't walk the stop until later on in the session, 11:40. I walked the stop because this occurs, right? So you have this little 15-minute structure over here, and then you break out of it. So I walked the stop up to under this guy, assuming that, the best case scenario from here would have been to just keep holding over this guy. I think that's maybe potentially a mistake. We didn't have a lot of balance here. It wasn't a clear breakout. So like it ended up, chopping around a bit more, but it's kind of hard to say in that moment. So I don't really regret that too much. Yeah, it's kind of hard to identify that in the moment. Oftentimes that's good enough. Like you see this 15-minute sideways and then you see a breakout, you hide it under the stop, and then ideally you see a good amount of follow through. I guess in the future I could wait for some follow through, but I was already pretty happy with these two chops anyway. So I walked the stop up to under 86 and then stop out the rest at 86, which is still a decent gain, 10 points on this guy. But there was a much bigger move into the end of the day, but I'm fine with that. Still a solid day, like a pretty solid day. Let's see, it's like a 40-point day, something like that. And then for 828, it was on the rut here. Mm, 828 was just this guy, and this was a gap. So I was thinking this is the daily context for 828. It was a gap, and I'm thinking, all right, if they can hold this gap, they should be trying to play to here, right? It's pretty, pretty straightforward. But they didn't hold the gap, so it was just not a. It ended up not being a winner, but no problem. So let's see, for 828, what did I do here? I bought the deval. Okay, so it was over here. I bought the deval, pass back over here, and it was just looking for an incomplete gap fill. That's really all that it was. So I bought this move back over the deval. I was looking for 88. But I should have just taken off at the development value area high, right? That would have been fine. I don't think it was that much. I could have like adjusted it to be something like this. But I was just looking for the 88. Meme exit, it was 2R, stops me out. And then I bought this pass back over 83.4, but I ended up just exiting it break even because I just didn't love what XLV was doing, right? Like I wanted to see strength in the healthcare and finance if the Qs were going to retrace, to have confidence in the rut buyers, sticking around, which it just didn't. So I just avoided any additional loss there. This was a full stop though, so not terribly cheap. It was like, I don't know, like more than 8 points, like 10 points or something like that. There was some slippage that I ate. So that was it. Fairly uneventful week, but still pays the bills, I guess. So that's it, my friends. That's it. Yeah. So if you wouldn't mind hitting us with a like and subscribe, we appreciate that very much. Lets us know to keep making content like this. Cost you nothing. And if you are interested in trading along a group of folks who, talk trading and share emojis and gifs or whatever, check out the Chart Guys community. Links in the description below. And if you're interested in trade ideas sent to your inbox every week, live updates for any trades that we take, get an update from me and Dan, check out the string report. Links in the description below as well. Otherwise, appreciate you tuning in. Thanks for sharing some of your time and energy with me. Hope you enjoy the rest of your weekend, and I hope to see you all next time. Farewell.